Mark Selby, CEO of Canada Nickel, advancing the Crawford nickel sulfide project and unlocking the Timmins nickel district.
Okay, well, let's talk about that word, advancing, because you've just put out a press release today says that you've actually delayed putting out the numbers to us. So is there anything wrong? Something we need to know about?
Nope, we've completed all the engineering for the base project, and we're happy with where the project's landing. What we're taking a couple extra months for is to complete the engineering on the carbon storage capacity there. What we're talking about with this carbon storage is creating 1 million ton per annum, and the test work we've completed and announced today has confirmed that we can hit that 1 million ton per annum target when the project's fully ramped up. In Canada, carbon prices are set to go to $170 a ton by 2030. As the storage facility for this carbon, we'll be capturing a portion of that. And as well, right now, there's some pretty comprehensive tax credits available from the government from between 37.5% to 60% of the capital involved in this. And we want to make sure that we're able to get as much of this free money as possible, because it means less future shareholder dilution in terms of the amount of equity we'd need to raise to get the project going.
Okay, I hear you. But okay, so tell me what you've done. When you say we've completed the engineering, what's left to do? What's the missing bit?
The missing bit is basically just completing the engineering for the carbon storage process that'll be incorporated into the process plant design. So we've completed a whole bunch of additional test work. We need to do some pilot plant scale work, which we couldn't get scheduled till July. So we're doing that this summer, and that'll allow us to complete the engineering work that needs to incorporate this carbon storage facility into the overall process plant.
But let me push you again then, Mark. Chris, you were aiming for the end of last year, initially for feasibility, right? Then you said, well, there's a big opportunity ahead of us, not in terms of just credits, but cash generative opportunity in front of us, because there's carbon capture storage and this whole IPT carbonization process. You then thought it might be the end of Q1, and now he's saying, yeah, you need a little bit more time. Or it's the end of Q2, sorry, and now you need a little bit more time. So again, I've got to push in. When you say this, we're not seeing anything that concerns us. What is left to do? Because the engineering bit, you've been working on it, you continue to work on it. Is it just about this pilot? Is it just that?
It's just about the pilot. So what we've done at the lab scale test work and a much more comprehensive lab scale test work. So we get a bunch of design parameters out of that test work. Now we just need to do it at a larger scale to be able to confirm that we can incorporate it into the feasibility study. And so, we're very happy, again, being able to do this, 1 million ton per annum is great. What we talked about in the release today is we're targeting 12 to 24 hours of residence time to be able to make that happen. But it basically, bubbling CO2 through those tailings, we can basically get all the short-term objective that we need within 6 hours. So that's much smaller than we were expecting to have to build, which is a big plus. And, the key thing to remember with all of this, when we deliver this in September, it'll be 14 months after one of our guys stuck a tube of CO2 into a bucket of tailings after an experiment, and we left it sitting over the weekend to see what would happen. I would challenge any of the top R&D product development, process development places, to be able to achieve what we've been able to do, in this span of time. And I'm very proud of our team's ability to deliver on this.
Okay, but just remind me of the scale of the opportunity again, because you mentioned obviously, credits from the Canadian government, but why is it so important to get this right now? Because I don't know who measures it, who validates it, who's to say, this is better than sticking a hose pipe in a bucket. What are you aiming for?
Yeah, there's basically two cash streams attached to this. So the first cash stream is the Canadian government announced a series of refundable tax credits in the 2022 budget from 37.5% to 60% of the capital invested in a carbon capture and storage facility. There's a time limit on this. You have to have it, by 2030, and then those credits disappear after a few years. And so, we want basically included in the process plant. We're going to push to have as much of the process plant included as the carbon storage facility, because at the end of the day, if we don't grind up the rock to make it available to the CO2 to store it, the whole process doesn't work. So, we're talking about, tens of millions, hundreds of millions of dollars potentially, in terms of these carbon credits. We have to go apply to the government to say, here's the process that we're going to use. We need to make sure it's rock solid, because we'll be the first people doing this kind of carbon storage. CarbFix injects CO2 into solid rock in Iceland. So we're not anticipating any problems, but we want to make sure that, we've got a bulletproof, here's the engineered design, here's all the test work. It works, please qualify us for this program. And, we can start counting on what that cash is going to look like. The second stream is, again, this 1 million ton per annum carbon storage that's there. In Canada, carbon prices are going to $170 a ton by 2030. For that price, people will be looking to capture the carbon, and they will need to store it. We'll be right now, it's illegal to inject CO2 into sedimentary rock. There's some of that in Southwest Ontario, but that's the only place where that rock exists. There's no other potential for that kind of carbon storage anywhere else in the province, and we'll be, at 1 million tons per annum, one of the largest storage facilities in Canada. So at 1 million tons a year, with some percentage, we don't know what that's going to look like, of that $170 tax that people will be avoiding. That's a very chunky revenue stream, that will be available to the project. And to be honest, we've already had, and we've talked about in the release, some big inbound approaches from some very large multinational companies, who want to provide, carbon solutions for their customers. And they need a place to store the carbon, that they want to help customers capture. And so they realize that there's a very short list of places where that can happen. And the fact that they've come to us already before we've even finished the design, I think really validates that, going down this path is 100% the right thing to do.
Okay, so the feasibility study will last. Actually, I understand the economics around this thing. Here's the question I had. I was just the thoughts of reading through some of the recent press releases. You've got Reed, you've got Midlothian, obviously Crawford. Will you be able to kind of just replicate this on all of these other discoveries, or does it all feed into the same facility? I mean, how do you look at that?
Yeah, so with these big bulk tonnage deposits, we're not talking about, high value per ton rock. We're building scale facilities to be able, to deliver at a cost. So, the key here is we'll be able to cut and paste that facility to each one of those deposits. There'll be some that end up as a cluster, but, the reason, we went and got all of these projects 2 years ago, before people really started to figure out what the real value of this is. One, we need lots of nickel in North America, and no one else is discovering very much nickel anywhere else in the world, number one. Number two, each one of these deposits, becomes another 1 million ton carbon storage facility, and again, some of these deposits are even larger, so they could become even larger than that. So in a world where people want to take CO2 out of the environment, and there's very few ways to be able to store that carbon, we are going to be one of the real alternatives. We're going to be plugged into the North American rail network, and so we'll be a real carbon storage destination, for people who want to eliminate, carbon from the environment.
Okay, you've just been on a road trip, been around Indonesia amongst other places. One of the biggest feedbacks that we get all the time is that, well, none of this matters because Indonesia are going to turn up the volume. They're going to flood the market. We're going to have more nickel than we need. What do you think to that? What did you see when you were on tour?
Yeah, so in Indonesia, there was a conference last week, and they had a series of site visits. There was lots of processing capacity being built. There's, I think, 4 million tons per annum on the books by 2030. And again, we think nickel demand is going to be 5 to 5.5 million tons or more. So, that capacity will get built. There's lots of plans, and the Chinese are cranking it out. The big risk there is one, is the ability of them to actually deliver that volume of ore. These plants started with saprolite ore at 1.8% a few years ago. What was interesting is the mid-tier guys are already processing just 1.6 to 1.65, and there was one small producer who's actually producing 1.5%. What that means is, the capacity's fixed, and if you've got 15 to 20% lower grades, you're going to produce 15 to 20% less material. So there's, just because the plant's being built doesn't mean is going to actually, produce. So And the Indonesian head of the Indonesian government agency, Geological Bureau, said he was skeptical whether or not they could actually deliver enough ore. And he's probably got some of the best insight in terms of what the resource looks like. The other big issue, again, all of this material is, effectively Chinese controlled. It has a large carbon footprint. The HPAL projects don't have the same footprint that the NPI MAT does. But again, for Western consumers, it'll be very, very hard, for them to rely on or want to use all this high carbon material. And so, in a lot of materials, in stainless steel, there's a massive price benefit in North America versus price premium versus the Asian market. In carbon steel, there's a big price premium in North America versus the Asian market. And so, again, I would not be surprised, given the fact that we can provide a clean, low carbon alternative, that you're going to see, my view has always been it's not class 1, class 2. It's going to be basically Western low carbon product versus Chinese high carbon product. And there will be, a premium that emerges, for the kind of product that we're making.
Okay, so as far as you're concerned, the type of product you're making, the byproduct here in terms of the carbon capture storage view, puts you in a good place. So Indonesia holds no fears for your company or companies like yours.
No, not at all. I mean, again, the entire automotive supply chain is not going to depend on Chinese controlled supply. The U.S. government and the Inflation Reduction Act, they have clarified a bunch of the rules, but one thing they talk about and they haven't defined yet are entities of foreign concern, which is targeted towards Chinese companies. So we'll see how that plays out as well. But Western consumers will want Western supply, and not Chinese controlled supply to rely on going forward.
Okay, and it just might come back full circle if you might, because you've been announcing lots of new discoveries of scale and great opportunity, but each one of those comes with its own sets of challenges down the line in terms of funding, etc. And what do you do with them? How do you monetize them, etc. Your shareholders right now are looking at your share price, going, "What's going on? Is it driven by nickel price? Is it driven by the fact that you're not getting this feasibility study over the line? Is it just wider equities pressure, which I guess a lot of metals and a lot of companies are under at the moment? What do you put it down to, and where's the uptick come from?"
Yeah, no, it's basically, all of the nickel development stories, if you look from the start of the year or when we raised the money, at $1.95 back in early March, would look like a very good thing to do. That this whole sector, has been pretty unloved. As I said before, the only time I've seen a bigger disconnect was in the early days of China, when people didn't believe China was for real. And again, I think investors, they talk about it, but the broader investment community, doesn't realize the raw material shortage that's necessary to make this energy transition happen. And when they do, that's going to really unfold over the next 12 to 18 months. We've seen deals and capital provided by automotive companies and lithium. You are going to see the same thing happen, in the nickel space. Again, I think, be patient, gonna ride through this. And, on the other side, the broader investment community will come. They didn't come until 2004-5 in the China story. It took them a good 24 months before the China evangelists, who made a lot of money because they got in early on. The EV story is still really not well understood by the investment community. And so projects like ours that are going to get the mining tax credit, refundable tax credit from the Canadian government, projects like ours that'll get the carbon storage refundable tax credit, that will substantially reduce the equity portion that we'll have to raise to get this project built. Projects like ours, we think will be real standouts, through the next 5 to 7 years.
Okay, and so I should have mentioned, I did want to ask you about this. Obviously, Texmont project seems to be moving at pace. Is there any value being attributed to that at the moment? I know why you did it strategically in terms of cash flow, smoothing the curves, as it were, but are people paying attention to this? What's the expectation of you, and has it allowed you to go and have conversations with battery manufacturers and others?
Yeah, no, Texmont, again, Crawford, we're advancing rapidly, but as a big project that needs to go through the permitting process, we're talking about first production at the end of 2027. With Texmont as a past producer, with mining leases in place, we think if the resource and the PEA pans out the way we think, that we could get this in production by 2025. Again, having the ability to deliver, even several thousand tons of nickel in that medium-term time frame, is something that, the EV chain needs all the nickel they can as soon as they can. And so, that's allowing us to have even broader discussions with people, who want to get as much nickel as soon as they can.
Okay, Mark. Good to see you. See you soon.
Take care, sir.